So good morning once again, professors. We begin a new week, and I hope that by the close of this week, we would have advanced very far with this final account of the sole trader. Before we move on, if there are issues that need attention, you can bring them to my table. If not, then we'll dig in straight away. So our last class ended with the format of the balance sheet. I gave you a brief overview and requested that you familiarize yourselves with it. I want to believe at least, if not all of us, 99% of us have done that. Okay. So we'll continue with that discussion today and move further a bit to preparing the balance sheet from a given illustration. Please, professors, are we good to go?
Yes, please.
Okay, that's fine. So I would show us again the format of the balance sheet. Like I indicated to you, the net asset method, right? And I did give a hint that for the net asset method is your fixed asset plus your working capital. I remember giving you that skeletal framework. So let me do some. Okay, so you start with your fixed assets, right? Okay, then you add on your working capital. Please, what did I say about the working capital? Permission to use WC for working capital. What did I say about working capital? Quickly. Yes, Prof. Portia.
So please, good morning. You said the working capital is the amount which was used during the accounting period for all the expenses and other stuff in the business.
And so I gave a formula. It's the formula I need now. Okay, thank you, Portia, though, for that bit. Any other? I was able to determine to you or make it clear what working capital is. Yes, Josephine.
Yeah, please, you said it's the current assets minus the current liability.
Exactly. That specific information is what I was referring to. So when you are preparing your balance sheet, you bring in your fixed asset, then you look for the working capital as stated. That is your current assets, okay, minus your current liabilities. So always take note of that. And that will give you the net total asset. Then you move to look at the capital or the owner's investment and any long-term liability. So I think I'll go through this time in details as you have it on the screen. So please, when you start your balance sheet, as always, you need a heading, and that is balance sheet as at. The reason why it has asset and it's not like the trading profit and loss account, which is for the year ended, the balance sheet is giving you the state of capital, fixed assets, current asset, liabilities from the day of commencement of business, okay, to the reporting period. If you started business in 2022, we are currently in 2025. If you were to prepare your balance sheet, it is going to show balances of your asset, capital, liability from 2022 till 2025. So it's cumulative, as in But for the trading and profit and loss account, it's just for a particular financial year. Okay, so if you were preparing your trading account, profit and loss account, it would have been for maybe only 2022, only 2023, only 2024, and only 2025. But your balance sheet is an accumulation of your commencement 2020 to 2025. That is why it has the heading as at. Okay. So you put that heading there, and like I've just stated, you begin with your fixed assets. Okay, but it's important that you show the cost of the asset, how much you acquired the asset, and less depreciation. Depreciation here is the fall in value of the asset because of usage, because of certain fiscal factors, okay, technological advancement, etc. We'll delve much into depreciation later. So when you do the subtraction, you get the net book value. Now, if the question does not have depreciation, then straight away, you don't need to show us this cost depreciation net book value, right? The value of the asset will be as stated in the trial balance without any depreciation. Then, of course, you add on your intangibles. These are the tangibles. You add your intangibles. You get your total fixed asset. Then you now go to assess or determine the working capital, which is your current assets minus your current liabilities. And professors, these are your current assets. And again, the current asset has been arranged in order of liquidity. In order of liquidity. What does this mean? This means that it has been arranged from the less liquid asset to the more liquid asset. If an asset is liquid, what it means is that it can easily be converted into cash. Okay, it can easily be transformed or converted into cash. And so right on top of number one on the list, which is the less liquid asset, the asset which is a bit difficult to convert into cash, is stock or inventory. So stock or inventory amongst the current asset is the one that is less liquid. It takes some time before it can be converted into cash. And of course, you all appreciate that if you have stock of goods, you have to get customers, distribute it to them. Some of them will tell you, oh, we'll pay you next month or whatever. So it takes time for you to convert stock into cash. The next is your debtors or receivables. That is easier to convert into cash compared to stock. Because if somebody's own, you can put in a call or get the person to pay. Unlike stock, where you would have to even sell to the person first before the person will say, okay, I'll pay you later. The next is that should be your prepaid expenses and accrued income, right? And I'll explain that before. So the bank should come and then the cash finally. Okay. So let me do that correction here for us. Okay. So the bank is supposed to come after the prepaid expenses and accrued income. What is a prepaid expense? Let me get my professor's view. Prepaid expense, what is it? Okay, I think Portia wants to give a bad let me seek other professors. Prof Mike. Prof Michael, do you have any idea what prepaid expenses are? Prepaid. Prof Tina. Prof Tina. Okay, I think there's another hand up. That's Austin. Okay. I want to hear from Tina if she has anything to say on that. Prepaid expense, what does it mean?
So please, I think there are payments made in advance for goods or services that will be used in the future.
Okay. So I love the advance payment bit. Thank you very much, Tina, for that point. Austin, let me hear from Austin, then I'll pick Portia finally. Austin.
Yes, sir, please, what she said, there are expenses that have been paid for but have not yet been incurred.
Okay. So they have been settled, but we've not incurred them. So, like she said, advance payment. Prof. Portia, you have something to add?
Please, they've said all.
Okay, so prepaid expenses are expenses that you pay in advance, right? A typical one is electricity. Currently, we are all, in fact, running on the prepaid electricity system where you pay for the electricity even before you use it, right? Unlike the earlier arrangement, which was the postpaid, where you use the light before a bill is given to you to go and pay. This time, you make payment even before you begin to use the light. So you have paid for the electricity in advance. Okay. The postpaid arrangement definitely will be the opposite of prepaid expense, and I think we'll get to it very soon. Now, the next one is accrued income. Accrued income. Professors, if you see the word accrued, what it simply means is that that money or that item is outstanding, or is in arrears, or it is in it has not been paid, or is owing, right? Owings, or is due. So, for example, if your father has not sent you your chop money for the month of October, we are currently in November, right? If your father has not sent you your chop money for November, then you can say your chop money is an income, right? So you can say that chop money for October is in arrears, or is your father is owing you that amount. Okay, and it is your money, just that you haven't received it. So for businesses that have rendered services or provided a product, but they have not received the income, need to put that in their current assets as income accrued, or income that is in arrears, or income that has not been received. I hope that settles it. Then the last two will be your bank, so the money you have in your bank account, and finally cash. So with a bit of the liquidity, cash is the most liquid asset. Cash is the most liquid asset. Why? Because it is already cash. Okay, followed by bank, because if you have money in the bank, you can easily go there and cash. But if you compare debtors and stock, it takes some time. Okay. Please, any question on the prepaid expense accrued income before we move on? Okay. So I think professors are good. So these are your current assets. How many of them? 1, 2, 3, 4, 5, 6. Just that you might have 2 or more prepaid expenses, maybe rent prepaid, insurance prepaid, and you may have 2 or more for the accrued income, right? But technically, these are the 5 categories of current assets you'd have to worry your head about. Then we go to the current liabilities. Current liabilities. Professors, again, these are your creditors or payable. That's the number 1. Followed by bank overdrafts. And I believe my professors know what an overdraft is. So again, I'm going to be asking. Bank overdraft. Prof. Bright. Bank overdraft. What is it? Okay, Portia, hold on for me. Prof. Champon, Bright Champon. Bank overdraft. Yes.
Hello.
Yes, let's hear you, Bright.
Again.
Bank overdraft. What is it? What does it mean?
The bank overdraft.
Yes.
So I think it's when you spend more money than you have in your account. Like you spend more than what you have in your account.
Okay. Okay. Can you cite an example?
Like I have 50 cedis in my account, and I spend 100. I spend the 50 cedis, then I borrow 50 cedis, making it 100 cedis. Oh,
Okay. Thank you very much for that. There are some very important points he makes there. Nadom, I think I want to hear from Nadom, and then maybe I'll do Austin and Portia again. Prof. Nadom, what's your view on this?
There, please. My understanding of bank overdrafts is let's say you have arranged with a bank that you spend a specific amount of money and you go and you exceed that amount of money. That's how I understand it.
Okay. Well, noted. Portia, and then I'll take Austin finally.
Okay, so please, bank overdraft is the money taken in excess of what one has in the bank.
Okay. Austin. Okay, Austin is giving thumbs up, meaning the same. Okay. So, professors, I think that you all make some point, but if I were to be marking and the full score was 5, I would have given all of you like 2 out of 5. Reason being that, first of all, a bank overdraft is a credit facility, right? Or is a short-term loan, if you want to put it that way. That is allowed to only current account holders of banks. If you are running a savings account or a fixed deposit, you cannot get a bank overdraft. So it's a credit facility or a short-term loan made available to current account holders, allowing them to withdraw more than what they have in their bank account. Okay. So the reason why you lost the 3 points is you didn't tell me the type of account which attracts or which has the bank overdraft facility, and that's current account. Okay. So that's a loan. You lost 3 points there. Anyways, so please add that to your point that it's a form of it's a short-term loan that is granted to current account holders, allowing them to withdraw more than what they have in their account balance. So the examples you gave there, let's say you have 1,000 Ghana cedis in your bank account. With this facility, you can take like 1,500. Sometimes it can even be zero. You have nothing in the bank account, but because you are a current account holder, the bank would allow you to, have that facility. It's more common with public servants. Okay, sometimes you are around the 20th, 22nd, salary is yet to be paid. You go to the bank to take your salary in advance. So immediately your salary drops, the bank take their money with a little interest. Of course, it's not free. It is given at some interest. Okay, so that is also a current liability. Then expenses accrued. So professors, the expenses accrued is the opposite of prepaid expense. So you remember the prepaid expense means you pay before you even incur the expense, like the electricity, you pay before you use it. But accrued expense here means that you have used or you have incurred the expense, but you haven't paid. So it's like expenses you are owing. So accrual, like I indicated, means owings or arrears or outstandings. Then the opposite of income accrued is income prepaid. So you remember the chop money scenario I used, where your father has not paid your October chop money. So you say your chop money, your father is owing you the chop money. So chop money owings or accrued. If it's the other way around, where we are in November, but your father has even paid for your December chop money. In business or in accounting, because you have not exhausted the period December, you have not even entered the month December. So that money, even though you have received it, is not your bona fide income. It is not yours. Okay. Right. So income prepaid simply means that you have received the money as a business organization, you have received the money, but you have not rendered any service or provided any product. Another example would be your teacher taking you for extra classes and your parents pay your teacher. Okay, so your teacher receives the extra classes fee in advance. Technically, until the teacher has taught you for the agreed duration, that money is not his. So that is income prepaid or income received in advance. I think there's a question in the chat. Austin is asking, hey, says, so in these modern times, can you even have accrued? Oh, yes. Some of the postpaid meters are still in the system. Yes. The changing to prepaid system is still ongoing, I think, but there are not too many currently. Most of those meters are gone. Okay, so yes, maybe 99% are on prepaid, but a few 1% will be on postpaid because Ghana is a big country now. Okay, so these are your current liabilities. You put them in, less from the current asset, get your working capital, and then add to the total fixed assets to get your net total assets. Now, if you go to the last section, that is your finance by, we are looking at how these assets were financed. And the first thing is the owner's equity or capital. That's the first thing you bring. Make sure to add any additional capital if there is. So all the capital comes. You add the net profit, which you have determined from your profit and loss account, less drawings. If the owner has taken anything for personal use, you less it here from the capital. And then after doing that adjustment, adding the profit and lesson drawings, you add on your long-term liability, which is your bank loan. And that'll give you your capital employed. So your capital employed is always supposed to be equal to your net total asset. If not, then it means there's a problem somewhere. Okay. So this is your balance sheet. Professors, let's start looking at the first illustration and how we can prepare the balance sheet. Is any question at this point before we zoom into? I think I've lost Thina and someone to network. Please, any question? No. Okay. So we look at this question, Bentel Enterprise. I think we prepared a trading and profit and loss account for this question some days back, right? So let's look at the balance sheet. So balance sheet as at 31st December 2002 or 2002. The currency is Naira. So your balance sheet also has 3 columns. As we just read from the format, the first thing you looked at is your fixed assets. But you need to satisfy yourself you don't have any depreciation. So you always have to check. So let's check if there's any depreciation, because if there's depreciation, then you have to show the cost column, the depreciation column, and the net book value, right? But of course, you can put it there. Plenty fish does not spoil soup, right? NBV, net book value. But this question has no depreciation. You don't see any depreciation here, right? So you go and pick your fixed assets from the trial balance. Professors, please help us identify the fixed asset in this trial balance. So who is getting us the first fixed asset? Okay, please go ahead, Portia.
Sir, please, premises.
Okay, so premises. Thank you very much, Portia. Is there any other fixed asset? Yeah, Josephine.
Sir, please, shop fittings.
Shop fittings. So, Prof. Michael, give us the values for these two fixed assets in the trial balance. Prof. Ajimai. How much is our premises and how much is our shop fittings? Prof, your microphone is on mute. Can you unmute? Unless maybe you cannot hear me at your end. If not, then I'll go to Augustine Akoli. Augustine, how much is our shop premises and how much is the shop?
Sir, please, our shop fitting is 8,000.
Mm-hmm. And the premises?
The premises is also 9,000.
Okay, thank you. So yes, these are the two fixed assets. If you go through the other items, of course, your assets are the debit side. And if you go through it, it's only your premises and shop fittings, right? There's no depreciation, so you can put the value straight under the net book value. Others will present it this way. They will show the cost 9,000, show that there's no accumulated depreciation, so that will be dash, okay, right, like this. It's permitted. So you get the total fixed assets, which will be 17,000, right? 17,000. And you need to underline them, right? You need to underline these columns total. So please follow me as I'm underlining. Except the NBV, where you don't, you only okay. So for the total fixed asset here, you only underline and leave the 17,000 simply because it's going to be added to the working capital. That's why we don't underline that figure. Okay. So this is our total fixed asset, right? The next thing is to go for your current assets. And so professors, let's see if we can get the current assets from this question. So we are still looking for asset, though our focus is here. Who is giving us the first current asset? Per the format, what should be the first thing to start your current asset? Yes, Josephine.
Yeah, please, stock.
So stock. And please note here, the stock in the balance sheet is the closing stock, not the opening stock, the closing stock. So can we identify the closing stock? Yes, as you see it here, note. Your stock at 31st December 2002 is 2,550. So look at where you put it. You put it at the middle column, 2,550. After stock, the next thing that should follow is your debtors, as we saw in the format, your debtors or receivables. So debtors, that is here 1,500. Then you look for prepaid expense and accrued income. Let me go back to that. Okay, prepaid expense and accrued income. So you see, we've taken our stock, our debtors. We are looking for prepaid expense, accrued income. Then we look for the bank and cash. So let's check the question. Professors, if you comb through this thing, you don't see any prepaid. You don't see anything like prepaid attached to any of these items. Neither are you seeing any accrued or any owings here. So those two elements are not in this question. So you look out for your bank and cash, and there we have them, the bank and the cash. So the bank, which is 2050, then we have the cash, which is 1150. Great. And that's all. You sum them up to get your total current assets. So total current assets. Okay. Great. Then the next thing is look for your current liabilities and less it. So less current liabilities. Okay, so professors will continue with the current liabilities when we zoom into the second session. Please let's all join the second session and we'll continue from there. Thank you very much.